Gold prices higher midweek as all eyes are on the Fed. But let's take a look at silver, which saw a bigger boost than gold on Wednesday. But can this upswing in the metals be short-lived? He's known as the silver guru. David Morgan joins us now. David, thanks very much for being with us.
My pleasure. Thank you, Daniela.
So, David, silver is up this Wednesday with December silver futures jumping over 4%. The question is, though, will this bounce be short-lived? Is it short-lived?
Don't know yet. Too much, too early to know. One day does make a market. Certainly for silver bulls like myself, it's nice to see a nice, robust move up. But will it follow through or not? I think depends how the Fed's action or inaction tomorrow manifests in the marketplace. If they do nothing, then you'll get one reaction, and they raise interest rate, you may get another one. It's really hard to read the tea leaves, but certainly this could be the start. But in my opinion, it's doubtful at this point.
Well, David, as you know, it's all about the Fed this week. And many analysts we spoke to said that the Fed's best move is really to move 25 basis points tomorrow. Do you agree?
I said that I felt that they would raise interest rates before the end of the year. And whether they do it on the 17th, announce it on the 17th or not, remains to be determined, obviously. I think that, one, they have to look at more than America. They have to look at the global economy and what an increase in interest rates would do. And a 25% basis point might, make the dollar even stronger and cause further hardships in the emerging markets. I think you might see something like, say, a 0.11% increase or 0.10% increase. That's also a possibility. And of course, there is a 25 basis points as well. My vote right now is to probably do nothing in September, and I'll probably announce it that things are getting better in the U.S. economy, job-wise, et cetera, which, of course, I don't really buy into, but that's what the official numbers show, and I agree that's what they show. And they'll probably say, looking at the European Union, if you go back to the ECB and what happened recently with Schäuble saying, and I probably slaughtered his name, that we got to take a longer-term view of what's going on with this money printing. My words, not his. And of course, Draghi said, over $1.1 trillion will be bought up in the bond market to the European Central Bank. So even some of the bankers are starting to have a little bit of dissent vis-a-vis what the overall main mouthpieces for the global economies are, primarily the ECB and the Federal Reserve. And I just want to go on a moment longer. There's even a little bit of sway between different governors in the Federal Reserve Board and, say, Yellen herself. So no one really knows what to do, but they don't want to damage the situation. It's precarious because you can make an argument they should or they shouldn't. I vote right now they won't. We'll see what happens.
All right. Well, let's put the Fed aside for now, David. I was happy to have you on because the issue of COMEX gold inventory levels is back. It's resurfaced, and people are questioning whether or not the COMEX gold warehouses are well stocked. Is there a looming physical gold crisis, in your opinion?
Very interesting question.
Right.
And I try to be as level-headed as they come. And no matter what I say, I'll get one group or the other, upset with me. But I just try to call them as I see them. If you look at CPN Group that put out a recent report and they show what the inventory demand versus the open interest is, you'll notice it goes between about 5% and 30%. Right now, it's about 15%. So by that metric, the facts speak loudly that no, relative to that. I want to reiterate what I've said many, many times, but a lot of people just don't seem to, get it, let's say. And that is that the COMEX, in my view, my opinion, is that it's more of a display mechanism than a settlement mechanism. Yes, it's a settlement mechanism for the paper price of gold and silver. There's no doubt about that. But as far as actually being a warehouse that provides physical inventory to the market, less than 1% of the total inventory situation or the total global demand comes through the COMEX in physical form, meaning that very little ever comes off of those inventories. So if you look at the ratio I just mentioned, it's in the middle of the range right now. And if you look at deliveries on the COMEX, they're actually going down and down and down. Now, I want to wear the other hat. If you look at how much physical gold is in the COMEX, versus, the open interest we just talked about, but versus what the total gold supply is. And I've used this wording, and I'm going to be consistent. It's pitifully small relative to what the overall global amount of gold above ground is.
Right.
However, again, almost all those contracts are settled in paper. And because of that fact, it's a place you can focus, you can make arguments, and on and on. And let me go one step further, Daniela, because there is a question out there that very few have asked, and I've been asked myself, and that is, let's just say that some big player came in and demanded physical gold or silver or both off of the COMEX and really forced the issue. The question is, would you really want to be that entity? Would you want to be that person? Would you want to be that pension fund? And the answer is really no. I mean, there's sort of this unwritten idea that if you really wanted to force the issue, you probably wouldn't force it through the COMEX because of bad press or whatever other repercussions would come out from the propaganda or the mainstream financial media that would say, look at this XYZ fund that disrupted the gold market. They took all this gold off of the COMEX. Why didn't they go to another broker dealer? Why, so it's precarious. So I hopefully answered the question. It's a focus that, requires people to look at it closely because it sets the price. But because it really doesn't do that much in the physical realm, it is vulnerable. But it's not as vulnerable as some of these articles have pointed out. Let's stick to the facts.
Right.
On the cover ratio, it's right in the middle of what it historically is. I can't argue with that. It's provable.
Thank you, David. Thank you for your thoughts today.
You're most welcome.
And thanks for watching this edition of the Kitco Gold Report. We'll see you tomorrow. Thanks for watching.